In this video, we're going to talk all about support and resistance. We're going to talk about the time frames you should be using to identify it, and I'm going to show you the 2-candle rule that I use to identify zones across any time frame, any currency pair, on any day of the week. What's up, guys? Welcome back to the channel. If you're new, my name's Austin Silver. I appreciate you being here. Do me a favor, hit the red subscribe button, join the family, join the team. That way you don't miss any of my trading videos. I'm going to be putting out a lot of videos for you guys, hopefully answering a lot of common questions. I'm going to focus these videos on what people are asking me the most. And recently, I've been getting a lot of questions about support and resistance. So in today's video, we're going to talk about the time frames that you need to identify the strongest support and resistance zones. But before we do that, we're going to actually break down what support and resistance zones really are, what they truly mean. So to jump into this, let's talk about support and resistance and kind of clear the air on the definitions of the two. For us, for the purposes of this slideshow, and hopefully what you're going to do going forward after you've watched this video, is not so much focus on whether it's support or resistance, the name of it. Focus on it as a price sensitivity zone, because price never respects one exact level. It's never going to be one exact price that creates a level. It's always going to be a range of price. It's going to be a zone. And to call them support or resistance zones almost makes them too permanent for me. So I like to call them price sensitivity zones, because what they're telling me is that when price reaches that zone, the market is likely to change. So how do we draw these zones? How do we break it down? And like I said in the beginning, I like to use what I call the 2-candle rule. So support typically is at the bottom. Resistance is typically at the top. So when we're looking for support zones on the bottom of candles, what you're going to look for is a wick where the 2 candles to the left and the 2 candles to the right are not lower than that wick. That would then tell us that the wick is our sensitivity zone, our price sensitivity zone. So what does that look like? Just as you see here, we have our candle in the middle. Let me turn my pointer on. Our candle in the middle with our wick set at the low. The 2 candles to the left and the 2 candles to the right are not lower than that wick, and that's why this wick creates the price sensitivity zone down here. Some people will call that support. I'm just going to call it a price sensitivity zone. And what we know, and this is all that matters, right? It doesn't matter the name of things, it matters what they mean. What we know is that if price comes down to this zone again, we can expect that market to change. Now, flip that upside down. If you're drawing resistance zones on top of the candles, the 2 candles to the right and the left, you want them to be lower than your wick. So here, if we take a look at another example, this is on the daily time frame, so each one of these candles is one day. You can see price went, set a high, created a wick. The 2 candles to the right and the 2 candles to the left are not higher than that wick, which means that this is our zone of sensitivity. You guys following me so far? If you are, give me a big thumbs up. So let's do a little quiz. Can you identify the zones here? Can you identify the support zones here? I'm even giving you a little hint in that keyword, support. That tells you what? That it's on the bottom. So what's the first zone that you should see? Right here. Because first, we're going to read the chart left to right, of course, because we can't, judge it in hindsight. We have to see it as it would paint. As price dropped here, when it set this low and stopped moving lower and actually started to come back up, you would then look at this wick for the 2 candles to the right and the 2 candles to the left to see if they're lower, because we're drawing support. They're not, which tells me that this is now the zone. So we're looking at days here, we're looking at a daily time frame. As the days went on, when price came back to this zone, I knew that the market may change when it comes back to that zone. And what does it do? It comes back and drops. As soon as it hits the zone, the next few days, what is that? 1, 2, 3, 4, 5 days, it bounces higher off that zone. So what happened? Exactly what we'd expect. Price came to a sensitivity zone and markets changed. So here's another zone that you should also be able to identify. Again, the wick with the 2 candles to the right, the 2 candles to the left, they are not lower. Those wicks can be close to that level, but they are not lower, and that's the key. So again, we're looking at it from left to right always, right? So we don't have hindsight bias. And we're looking at 2 candles to the right, 2 candles to the left to identify where our zones of sensitivity are. So here, another example, you can see price was in a downtrend, right? This is GBP AUD on the daily time frame. So price dropped for pretty much 2 weeks, finally started to pull back. As it pulled back, you would look for it to move down again in that overall trend. Once it did that, it created its first top. When it created that top, which in the overall structure would just be a lower high, right, from the high set up here. Once it created that, we would go in using this 2-candle rule and look to identify the zone. So how do you do it? You find the candle where the 2 candles to the left and the 2 candles to the right are not higher. Here, you can see this wick, it's close here, but this one to the left of it is not higher, and this one to the right of it is not higher. So this wick right here creates the zone. Price comes out of that zone and back into it. Once it comes back into it, it's moving up, back into it. We know that markets will change when they're in the sensitivity zone. What does it do? It moves off that zone back down in its overall direction of trend. So pay attention to how these zones are created by wicks with the 2 candles to the left, the 2 candles to the right, and even as price moves off the zone, if it comes back to it, when it comes back to the zone, your mind should instantly think the market is going to change here. Now, this is how we can use these zones in our trading. If we're able to identify them on the daily, the 4-hour, the 1-hour, the higher time frames, we can back it down and make sure that we're not getting caught, for example, selling when we're actually at maybe the bottom of a market, selling in a support zone. You would want it to break that support zone before you would want to go sell it. So things like that are very, very important to remember when you're drawing these zones. Again, just another example, this is GBP AUD. Here we have the pin for the high, 2 candles to the left, 2 candles to the right are not higher. When price comes back to that zone, this is weeks later. Weeks. This is March into May. Weeks later, it comes back to that zone for 1 day. Can't even hold the zone because we know what? Once price comes back to it, because it was already set, we know markets will change. And look what it does. It changes. It came up to it, it changed, and came right back down. Now, you should understand the 2 candle rule, right? So we have to talk about the best time frames to draw these zones. Like I said already, the higher time frames are going to be the strongest, right? The 4-hour, the daily, the 1-hour, those 3 are your main zones. Now, that doesn't mean you don't want to use the 15-minute when you're looking at a 15-minute for entry and draw zones. Would I draw them on the 5-minute? Probably not. On the 1-minute? Definitely not. I would stick to the 1-hour, 4-hour, and daily, and I would really understand that if multiple zones overlap, meaning if we have a daily zone and then a 4-hour and a 1-hour zone inside that daily zone, they're going to be very, very, very strong zones of price sensitivity, which means it's more likely that when price comes back to it, it's going to change in whatever direction it was moving. Does that make sense? Now, here, NZD-CHF, let's test you again. Can you spot the support zone on the bottom? I think we all can, right? You can see it right here, 2 candles to the right, 2 candles to the left. That's now our zone at the bottom. Okay, so this sets the zone for our week. We're looking at a 4-hour chart. So each bar here is 4 hours. Notice, as that week went on and even into the next week, what happened when price came back to the zone here? It changed and bounced. Price came back to the zone, it changed. Following what I'm showing you here, every time, if you can identify the proper zones, you'll see it. Price comes back to the zone and it changes. And how can this keep you from taking bad trades? Well, if you were looking to short, you know, and I said this already, you know that you want that zone to be broken before you could short it. You wouldn't want to short it at the top of that support zone because you know it might change and bounce right off of it. So being able to identify these zones and understand every time price comes back to it until it's broken, it's going to mean that the markets can change. So you're going to say, Austin, aren't there zones everywhere? Yes, they are common. And that's why they aren't used to base your trading entries off of. These are, like I said, sensitivity zones. We know the market's going to change there. So if you're looking to enter a trade, you should probably pay attention to see if you're in a zone where the market could change, because more often than not, you want to already be past the change when you're in the trade. You want the market to be falling, and then you want to be involved and taking that ride down. You don't want to try to get in before the fall even starts. You don't need to try to anticipate moves like that to make consistent money as a trader. You trust higher time frames. You trust these zones to say, hey, you've broken the zone, now you can take the trade. Oh, you haven't broken the zone? Wait. If we break, then you can take the trade. And that's the proper way to use these zones. Now, let me just show you a few more examples. This is NZD USD on the daily time frame. Charts now looking how I use my charts every day. You can see gray with my EMAs in the background. So we see the zone set here. This is back in December, right? What happens? Price comes to it here in February, it changes and comes off of it. Price comes back to it here at the beginning of April. What happens? It changes and moves off of it. Remember, the change is coming because price was moving up to the zone, and we know if price is moving up into the zone, it's going to change and move down, move the opposite way, right? Price comes up into the zone, changes, moves down into the opposite way. Here, this is Euro USD, and this is going to be what I was just talking about you want to wait for the zones to be broken. This was a recent trade that I was in. So you can see the zone set here, and this is just on the 15-minute. The zone set here, 2 candles to the left, 2 candles to the right are not lower. The zone was really tested all night. Asia session through London session, tested, can't be broken, news chops it around. So what did we do? You wait. Look, it breaks the zone. The trade ended up being a small winner, but still a winner. Why? Because we waited. If we had gotten short here before the break of the zone, we would have gotten burned. If we had gotten short here, it could have still burned us because we didn't know it was broken yet. Once it's broken, then you can go make your money. Here, another really great example. This is Euro NZD. Look at that zone set on top. You see the zone set on the bottom here. So again, this is an example also of why I don't like support or resistance as names. Price sensitivity. Because look, price came up, set the zone here with this large wick, right? 2 candles to the right, 2 candles to the left are not higher. It broke through the zone and then used it as support. So do you call it resistance here for the short time and then once it's broken, support? It's semantics. It doesn't matter. It's price sensitivity. We know that if it's broken, it's going to come back. And when it comes back to it, what did I tell you it's going to do? Market conditions are going to change. So the zone is set, price moves up, we then set a zone at the top. Now on the 4 hour, we have our top and bottom support, price sensitivity, whatever you want to call them, we have our zones set. So we know that as price pulls back down and comes closer to the zone, if it reaches, we know markets could change. And that's exactly what happens. Price hits the zone, as it's coming lower, it changes conditions and moves higher off the zone. Same thing happens a few days later. Price comes back to the zone. Because it doesn't break down through it, we know that that means it's going to, again, change, and it does. Comes back higher off of that. As it approaches the top zone, what happens? You guys should start finishing my sentences at this point, right? It comes to the top zone, it changes conditions, and it comes right back down off of it. So what do you think is going to happen here when I show you the next slide? As price gets closer and closer to the top of the zone here, if it doesn't break, what's going to happen? Exactly. It holds the zone because it doesn't break, and it ends up coming lower off the top. So we know that as price gets in here, if it can't break above, here the price was 1.76, right? If it can't break above that price, we know that it's going to change conditions and probably come down off of it. That's exactly how you should say it. We know it's going to change conditions and probably come down off of it. Or if it was coming higher, the inverse of that. But you get it. Changing conditions. So to sum everything up, make sure you're focused on the 2 candle rule. Use these zones to help keep you out of trades and to help confirm the good trades. What I mean by that is if you're looking to go long and you can find multiple confirmations that you've either broken the support zone or you're coming out of that support zone, you'll know that those are good entries to take. Versus if you're looking to short into a zone and you know that, okay, we needed to break that zone before we can actually get into the trade, by using this 2 candle rule, you're going to make sure that you're using the right zones to identify that. To say, okay, here's my 2 candle rule. I see 2 candles to the left are not lower, 2 candles to the right are not lower. Draw my zone. If it doesn't break, I can't short it. If it does break, then I can look to see if my signal still makes sense. So you use these zones to keep you out of the bad trades and confirm the good ones. Again, stick to the 2 candle rule and it's going to make a lot of sense for you. Rely on the higher time frames, the daily, the 4 hour, and the 1 hour. Use the 15 minute if you need to, but I would start with the daily, 4 hour, and 1 hour. It's pretty simple, guys. 2 candle rule, 2 candles to the left or right. Keep it simple and it's going to work out well for you. So if you learned something, make sure you drop a comment below. If you agree with me, if you like the idea, let me know. If you don't like it, I'm down to hear that as well. I'll make sure I answer all the comments as always. I appreciate you watching all the way through. Make sure you're subscribed and I'll see you in the next video.